Here I should be live here on Facebook, and it is Wednesday, about 9 a.m. Eastern time. Hold on one second here. Okay, sorry about that. I should be sharing my screen now, so hopefully you can see my screen. I've done a couple of Facebook Lives lately where I've been rambling on, and I didn't share my screen, so I had to delete them and do them over. So pretty sure I'm sharing my screen right now. So let's go through, let's look at some of these situations, some of these trade idea alerts that came out that were confirmed with the Sniper Pro scanner. This is following our community's strategy, which I do as well, which I call it the ATH RSI Sniper Pro 15-minute trade plan, right? So it's an offshoot of our community strategy. I like to do it on the 15-minute. They like to trade more on the 1 and the 5. I like the 15, and I add a few more conditions in there before a trade is confirmed. So this is CADCHF from yesterday. This was a confirmed trade idea alert Monday. This was Monday evening during the Asian session. You could see here this pushed up a little bit. And again, following my trade management rules. And again, if you want to get access to this complete trade plan along with all the trade management rules, the video that explains everything, there's actually 2 videos that explain everything. One explains the strategy, one explains the trade management rules. You just have to request a copy of my free ebook, which is my Forex Quick Start Guide. It's a beginner's roadmap to day trading success. And we have a bonus chapter in that ebook. It's a free ebook that goes over the trade plan. So if you want to get access to that, just message me here on Facebook or email me at bill@tradewithbill.com, and I'll send you a link to register for that. You're also going to get our community's 9-part smart money trading video course as well over a 9-day period, but you'll get the ebook right away. So following the trade management rules in the strategy here, this would have moved up enough to move our stop loss to break even. And that's probably what would have happened on that trade. And of course, if you didn't do that, you would have ended up losing the trade, or maybe you just reduced your risk in half and you lost half of what you normally lose. This was this EURJPY trade from Sunday night, which I talked about. This one, again, following the rules, would have given you probably about this much right here that I'm circling. And then it gives you another entry right here where you can get another little bit onto that. So those were 2. This one went off yesterday, 6 p.m. Eastern time, right? So we had 2 trade idea alerts here in EURJPY confirmed by the scanner. That's the Sniper Pro scanner. This is GU. This was that trade I was in yesterday. I got out of this with about this much here. And then, of course, price just moved up, and it's kind of been right around there. Then we got this trade idea alert right here, which I liked a lot, but it wasn't confirmed by the scanner, so I didn't take it. But I had a feeling that this was going to happen here. And we're going to talk about, we basically made a good decision to get out of this. We could have gotten more, though. Probably stayed in that one a little too long. This one here, not working out right now, as you can see. I don't know how this moved up here. So if you would have taken this trade, that's not looking too good right now. The dollar started off this morning with some strength, but then as we came closer and closer to the New York Open, it started getting very weak. This was a confirmed trade ID alert in the NAS 100, went off overnight 2:45 a.m. That's moving up pretty good. This was also from 3:30 a.m. this morning in NZDUSD. This one's now kind of pulling back to break even, but this one really didn't move up enough. You really weren't in profit enough to adjust your stop loss at that point there. This was a trade I was in here. This was a trade I took last night about 7:30 p.m. Eastern time. I stayed in it overnight. You can see how it made a small move up, then it came back into drawdown, and then it started climbing up here right around 2:45 a.m. this morning, like I said. And then you see how it just kind of drops off. Okay, so I was able to make a good decision and get out of this one. And I'll show you on my broker. I only show you my broker chart here because this actually shows you where I got in, right? There's that that's where I got in after the alert. I got to the chart a little bit late, so my entry was, I didn't get the best entry, right? Because this was actually the trade alert candle right here that was confirmed, and then I got in on this candle here. So I was a little bit late getting to the chart, but I jumped in here as this was moving up, and you could see right here, this is where I decided to get off, so get out. So I did make a good decision. In hindsight, it's a good decision, okay? But price could have very well pulled back a little bit and then decided to keep going in my favor. But I made a, which right now we're going to call that a good decision to get out. As you can see, price is continuing to drop and the dollar is continuing to weaken. And that's why we've seen pairs like GBPUSD starting to move up. And that's why I was hoping that I would get I was hoping that this trade idea alert right here would get confirmed by the scanner, but it didn't. Okay, it didn't, so I didn't take it, but you could see here that this is definitely moving up because as the dollar weakens, this pair here is likely to move up, right? GBPUSD and USD-CAD and USD-CHF and USD-JPY are going to continue to move down, as we could see here. So that's kind of what's going on. I'm not in a trade right now. That's the trade I was in last night, and I got out of it this morning, like I showed you, on this candle right here. So, which brings me just to talking a little bit more about, things that I have a list of things that I read through before I start my trading day, because it's hard to get up in the morning and then come right down and start trading. So I go through a little process where I have a sheet that I read to myself, and one of those things I read to myself, in before and while I'm in trades as well, I'll go back to that sheet and I'll read it off again here. And one of those things is to remember to cut losses short, right? Never want to lose more than 1% on one trade. So there's never a reason, if you're losing a trade, there's never a reason to move that stop loss and adjust that stop loss. A lot of people say, oh, I think it's just going to move down a little bit. I'm going to adjust my stop loss. And then boom, now you've lost more money, right? So you always want to cut your losses short. And the way we do that is easy. We set a stop loss, right? And we don't want to risk any more than a certain amount of money on each trade. And that's it, right? If it gets hit, it gets hit. You lose the trade, move on to the next one. The other side of that is we have to let our winning trades run, right? We have to let our winning trades run, because when we're up, right, we should be hopeful, not fearful. We should be hopeful the price is going to continue moving in our direction. But what happens is the normal thinking, right? And again, referencing Tom Hougaard's book again, The Best Loser Wins. Normal thinking never wins the trading game. The normal thinking is we get fearful because we see we're up a certain amount of money and we don't want to lose that money. So we begin to get fearful when we should be hopeful. Okay. And so what we have to remember every day is that there's a cost to pay to see where the market will take us. And so the question we have to ask ourselves every day and every trade really is, what are we willing to pay to see where the market will take us? Okay. So if we're up a certain amount in a trade, we have to come to terms with ourselves, and we have to say to ourselves, hey, what am I willing to give up to see how far the market will take us? And if we get out of that trade, right? And in this case here, it looks like I made a great decision, right? But that could have very easily went the other way, and it wouldn't have been a good decision, right? Because I can't predict the way the market's going to move, right? So looks like it was a good decision, but if it had gone the other way, I wouldn't be real happy, right? But again, I have to use, what I say to myself, right? To help take the emotion out of trading, take the emotion out of trading. And again, I'll go back to that story that's in Tom Hougaard's book about, I think his name's Luke Donald. Luke Donald at the time, I think it was back in 2007, was one of the top golfers, and Tom asked him if what it was like playing with Tiger Woods, and if he thought he was a better golfer than Tiger Woods, and Luke's answer was that if Luke's answer was that he didn't think that Tiger Woods was a better golfer than him. As a matter of fact, I think I have it up here somewhere. Here's the actual thing. Is Tiger Woods a better golfer than you? I don't have a great memory. I'm not really a public speaker, so I don't remember things. So it's just best if I show it to you so that I don't mess it up, right? That way you get the full effect of it. Is Tiger Woods a better golfer than you? I don't think Tiger's a better golfer than me if you measure in how well we putt or how far we hit the ball. But Tiger does have an amazing ability to forget his mistakes and move on. For example, we could be on the 15th and both make a bad putt. By the time we get to the tee up on the 16th, it is as if Tiger has wiped his mind completely of whatever happened on the 15th hole. And he is totally in the moment. This is what we have to do in trading, right? Now, on the other hand, Luke Donald, would still deal with the mistake he made on 15, and it would more than likely affect my performance on the 16th hole, right? The fear of making a mistake is the worst. No one wants to fail, right? And so this is what we have to do, right? When we lose a trade, or we make a decision to get out of a trade and then price continues in our favor, whatever it is, if we just miss a trade, we have to take the emotion out of trading. We have to move on. When we close one trade, whether we made money or lost money, we have to move on to the next trade, and that's it. And this is how we take the emotion out of trading. And we have to be like Tiger. We have to be like Tiger. Once that trade's over, we're on to the next trade, and we have to wipe our minds of whatever happened on the trade before. We can't use anything that happened on that trade before to affect our decision making on the next trade, because it doesn't matter. All trades are the same. They all have a 50-50 chance of winning, right? It doesn't matter if you've won 3 trades in a row, the next trade still has a 50-50 chance of winning. It doesn't matter if you've lost 5 trades in a row. You can't think just because you lost the last 5 trades that this trade is definitely going to win. No, it has the same chance of winning, 50%. Doesn't matter how many you lost before it, how many you won before it. It doesn't matter about any of the trades before it. The trade that you take next has a 50% chance of winning, and that's it, right? And to help us with that, Arnold Schwarzenegger is one of the best. I guess he has the best one-liners, right? That "I'll be back" from Terminator movie, that'll go on forever. That'll go on forever. That "I'll be back" will go on forever. He uses it in his other films as well, but he's in a series that I watched called Fubar. I just watched the second season of it, and he has a line in that. Let me just show you this real fast here. He has a line in that movie, and it's that's it, and that's all. So that's another thing I say to myself. Once I close a trade, that's it, and that's all. It's on to the next trade. Okay. We have to wipe our minds clean of the trade that we just got out of, and we have to move on to the next trade, right? So in Fubar here, Arnold likes to use this phrase, that's it and that's all. And he uses it as a way to shut down conversations to avoid deeper emotional engagement. Again, it's all about removing the emotion from trading, right? And that's why Arnold uses this line. We have to use it too. You know, just say to yourself, like that's what I do. When I got out of that trade today in USDCAD, I didn't know, right? I didn't know if it was going to keep going in my favor or what. I decided that I was willing to give up this amount of money to see where the market would take me. And what happened was price started dropping and that amount of money was hit. I exited the trade. Okay. And at that point, I had to say to myself, that's it and that's all. We're on to the next trade. What happened on this trade will have no effect on the next trade, and we're on to the next trade. Let's find the next trade. Let's find the next opportunity to take money out of the market. Okay, so I just wanted to mention a couple of those things, guys, and I hope that that helps you in your trading. I know it helps me in mine. Like I said, I do have a list that I refer to. I'm wondering where if I have that up here. I call it flip the switch, right? And I have just a lot of things that I go through here, right? I will follow my trading plan, right? Some of them, in my trade management plan, a good trader is not someone who wins every trade. It's someone who follows their plan with discipline and protects their capital, right? Normal logical thinking never wins the trading game. I say all these things to myself here, guys. If you want this list, let me know. I'll send it to you, but I'm sure you probably have your own. The market owes me nothing, right? A lot of people, when they lose a trade, they blame it on the market. It's not the market's fault. The market owes you nothing. The market doesn't know where you're at. The market doesn't know. I mean, it doesn't have a thinking machine where it knows what you did and which way it wants to go just to screw you up, right? The market owes you nothing. In fact, you can say that it's the market's job to take your money. But on the flip side of that, the market gives you plenty of opportunity to take money out of it. Okay. Cut our losses short, no more than 1%. Let winners run. Don't be fearful when you should be hopeful. There is a cost to see where the market will take us, right? The question is, what are you willing to pay to see? That's the price of admission for you. When you're up a certain amount and you want to see if the market will take you more than that, there's a price that you have to pay to see that, right? Once you decide to close a trade, that's it and that's all. It's on to the next trade with no emotion. Okay? Okay, guys. Have a great day. Any questions, drop them down below. Anything you'd like to see me talk about, drop them down below. If you're watching this on video on YouTube, because I usually take these live sessions and put them on the YouTube as well. So if you're watching this on YouTube, please make sure you comment, like, subscribe to the channel, all that stuff. And again, if you want to get this complete trade plan along with the trade management plan that goes with it, just drop me a note here on Messenger or email me at bill@tradewithbill.com and I'll send you the link to register for that free ebook. And you'll also get our community's free 9-part smart money trading video course. Have a great day, guys.